Hello everyone, how are you all? I am doing absolutely great and I hope that you are also doing great. Yes, I am your CA Rajavardhan and in today's discussion I am going to teach you how to pass a journal. Come on, let's get started. But before that, I have some amazing news awaiting for all of you. We have started a batch on an academy called as Step Up with Yashas batch. The current focus is especially oriented towards the November 2021 attempt. However, people who are writing their CA Foundation exam in November or after November 2021 can definitely enroll to this batch. This batch is going to be 100% English and is going to be a comprehensive batch. The batch timings would be usually 8 o'clock to 1:30 p.m. in the morning. That's a morning batch. And then there would definitely be a half an hour break for your notice. And the evening batch would start at 3 p.m. and end at 8:30 p.m. Batch already started on 16th of June. That's a little while ago. But trust me, you can definitely catch up with the syllabus. Talking about my paper accounting, I've hardly done with two topics which you can finish it in a flash. Now, what are the advantages of getting to join this batch? You get to learn from the India's top educators. Yes, that includes all the names that you can see on the screen. And this is right now focused on the November attempt, right after which you're going to join intermediate and then learn with us. And there are quite a lot of unique features that you can avail from joining this particular batch. Number one, it will be live interactive classes, not recorded classes. However, the recorded classes will be available if in case you miss out on any of the live class, and you get to access all the notes of the educator right at the end of the class in the PDF format. Every fourth session will be doubt solving sessions, and in fact, in each and every session you can ask us the doubts. If you attended any of my plus classes, you definitely know that all the doubts will be taken then and there, and you will not keep any of it to the fourth session. However, the fourth session will be a doubt solving session, and the study materials that we provide will be in sync with ICA material. We're not going to do it in a very haphazard manner. We're going to start with chapter 1 unit 1 of ICA website, ICA study material, and end with the last chapter, last unit of ICA material, and will go in sync with the chapter wise and the unit. And practice and mock tests will be conducted on regular basis. In fact, not to forget, very exciting quizzes on each and every topic. And you can learn from your notes on the go because it will be available in the PDF format as I told you previously. And the most interesting part would be it would be absolutely colorful notes to read from. Done. So then what are you waiting for? Get your subscription today and learn from the top of the Indian educators. Then all you would have to do is go to an academy, search for the an academy learning application on Play Store, download the application, and then get the subscription. Okay, what subscription? You can take the subscription for 24 months, 12 months, 6 months. If you take it for 6 months, it would be 12,000 rupees, which comes to 2,000 rupees per month. Let us bring it to half of it, meaning if you take a 24-month subscription, it comes down to only 917 per month. It's basically less than half of the price that you pay per month for a 6 months plan. And if you use the code YASHAS, then you basically get an additional 10%. Might not be able to see it because it is, yeah. Now let me use white. This makes it with, use the code YESHAS, YESHAS. Then you'll arrive at a 10% discounted price on all of these subscriptions. And however, we are not going to end our course with only CA Foundation, isn't it? We're going to go join CA Intermediate very soon. So if you take a combo, then you would get it at 2083 rupees per month for a 12-month subscription. And yeah, that's for 25,000 rupees. If you take it at 24 months, you would get it at a price of 1,333 per month. And again, if you use the code YESHES, you would get 10% off. For a 12-month subscription, you get 2 months free. For 24-month subscription, you get 3 months free. That's the points to be noted. And there's another amazing benefit added called as iconic batch. These are at a little higher price than the normal batch. You get personalized coach, you get the hard copy of the books, and then you get industrial experts taking sessions to you in person, teaching you how to be ready for the industry. And the learning process of yours will be tracked chapter wise, and then you'll get a Discord channel for you to chat and then communicate, and a lot of other plus benefits will be available for an iconic batch. The price for the iconic batch will be, if you take a 24-month subscription, it would come down to 2,417 per month. And if you take a 6-month subscription, it will be double the price, 4,167. And again, if you use the code YASHAS, you definitely get 10% off on this particular subscription. And again, as I told you, you can go for a combination, that is CA Foundation and Inter. There you would get 24-month subscription at 2,750 rupees per month. and 12-month subscription at 4,125 per month. And again, if you use the code YES, you get 10% off. So this is with regard to subscription details. I hope you will be enthralled to take up the subscription and then learn from us. Now let me just walk you through to journals. All I was trying to tell you in this particular thing was you're going to learn how to pass journal entry. If you have any questions as to what exactly is journals, journals, my friend, is called as the primary book of entry, because anything, if you join a school, you just first join the primary school and then go to the high school. Similarly, secondary school and high school. Yeah. Similarly, any entry which comes into the books of account should enter through the journals. Journals are called as the primary books of, and these are the books where the original entry is made. The process of entering it is called as journalizing. Is it called as journalizing? The next important point is the transactions which are entered in these journals are made in chronological order, meaning in the order of which they happen. First we record today's transaction, then we record tomorrow's transaction. If in case the same very day today, if there are three transactions happening, those three transactions will be recorded in the order of their happening. A transaction which happens at 9 a.m. will be recorded first. Transaction which happens at 11 a.m. will be recorded next. And the transaction which happens at 2 p.m. will be recorded after that. So this order, my friends, is called as chronological order. I hope you got it. Next, let me walk you through the format of this. Format of journal looks somewhat like this. First and foremost column will be called as the date column. It will be followed by another column called as particulars column, where we basically write the accounts involved in the journal entry. And then we'll have a column called as ledger folio, where we write the page number wherein this journal entry is posted to in the ledger. Yes, in the first stage we write the entries in the journals. Later, when this journal entries gets posted to ledger, where is it visible in the ledger? That page number would be written in the ledger. That page number would be written in this column. This was very significant in the manual system of accounting. However, in the computerized system of accounting, this number is not so. And then we'll have two amount columns, one for the debit, other for the credit. And that's how it would be. If in case I take a transaction as a basis, like cash introduced as capital, then the journal entry would be cash account debit to capital account. I would write the date in the date column followed by cash account debit. Then I'll write to capital account, and the amounts would float in the amount columns, debit and credit. And then it would be followed with an amazing description of the transaction. Such description of the transaction is called as narration. Narration usually starts with this letter B. In this case, the transaction is about bringing in cash towards capital. So my narration would be being capital of rupees 10,000 introduced in cash. This, my friends, is the narration. Now you might be wondering, sir, you told us that you will teach how to pass journal entry, but you straight away arrived at a journal entry. We didn't know why to debit cash account, why to credit capital account. We didn't understand this. Can you help us walk through this? Yes, definitely I'll do that. That's the reason. And this is just an example of how the journal will do. Now what will we do is, now we'll understand how to pass a journal entry. In order to know how to pass a journal entry, there are certain steps that we follow. So I've basically categorized the steps required to pass the journal entry into three. How to pass a journal entry for dummies. Step number one is identifying the transaction. So, in the happenings of the business, which can be categorized into economic and non-economic, among the economic activities, we need to identify the transaction. So, is it a difficult thing to identify transactions? No, you don't really have to worry, because when you read the question would have already identified the transaction. So, this job is done for you because this would be given in the question. So step one, ICI does it for you when you basically take up the. Let's walk into step two. Step two is you need to read this transaction and then identify what are the accounts involved in this transaction. Yes, heard me right? You need to read this transaction and then identify what are the accounts involved in this transaction. Usually it will be minimum of two accounts that's involved. You remember dual aspect concept? Yes. Note the accounts involved and categorize them. Sir, how do we categorize them? You can either follow that modern approach or follow the traditional modern approach, wherein we categorize the accounts as what do you say, asset, liability, capital, expense, revenue, or you can categorize them based on your traditional approach, real account, personal account, nominal account, all these types. Or if you heard me teaching in the past, I would have taught you something really cool called as the Bangalore approach, asset, liability, owner, security, revenue. That would also do. Any of the approaches, either the UK approach, the US approach, or our favorite Bangalore approach. You can follow either of it. So using these approaches, we basically categorize them. What are the approaches? Traditional, modern, Bangalore. Alore, A-L-O-R-E. I hope you remember. Then the next thing that you need to do is, after you identify this, you need to figure out what is the impact on this accounts because of the transaction. Whether these accounts involved, are they increasing or are they decreasing, or are they decreasing or are they increasing? You need to identify. Now, why? Because that helps us identify whether such an account has to be debited or such an account has to be credited in our journal entry. So step 3 is finding the impact of the transactions on the accounts that we identified in step. Basically, whether to determine should be debited or credited. Now, why waste time? Let's quickly take 5 transactions and then understand whether the accounts involved are to be debited or credited, which is to be debited, which is to be credited, and finally arrive at the journal entry. Let's get started. First transaction. Journalize the following transactions. A. Started business with capital of 10,000 in cash. What are the accounts that are involved? Number 1. Capital. Capital is owner's equity under our traditional approach, under our Bangalore approach. Under the modern approach, it is capital, and under the traditional approach, it is personal account. Next that we have is cash account. Cash account. It is asset under our Bangalore approach, or what to say UK approach, or the modern rule. Under the US rule. Under the UK rule or the traditional approach, it is real account. Now we need to understand whether they are increasing or decreasing. When you bring in cash towards capital, capital is increasing. Let me write that. Cash and capital are the two accounts involved. What are the two accounts involved? Accounts involved are cash account and capital. Accounts involved are cash and capital. Type of account. It is capital account is owner's equity or personal account. Cash account is asset or real account. Now, capital account is increasing. When a capital item is increasing, what do? We have to credit it. And similarly, an asset or real account that is also increasing. What do? Debit it. So capital increasing is to be credited. Asset or real account increasing is to be debited. So the debit aspect comes first. The journal entry will be capital account debit to, cash account debit to capital account. So the journal entry will be cash account debit to capital account. For this, you would have to write a narration, which I'm skipping right now. The narration would be same thing. You would write, being business started with capital of 10,000 in cash. Yes. Let's go for another transaction now. Next transaction that we have with us is opened a bank account and deposited rupees 5,000. We need to identify what are the accounts involved in this transaction. The accounts that are involved are, number 1, bank account. Bank account is a personal account, or we can call it an asset as well. Next, it is deposited. What is deposited? They haven't used the word cash here. I cannot go deposit my kidney in the bank, isn't it? Yeah, obviously I would have deposited cash. The second account involved is cash account. Here the word is unspoken. You need to read between the letters to identify the account that's involved here is cash account. Cash account can be a cash account is called as a real account as well as it represents an asset. That's the accounts involved. Now come on, let's go to the answer. What's there in the answer? Accounts involved. Bank account and cash account. Bank account is a personal account or an asset. Cash account is an asset or a real account. Both are increasing. Now, bank is increasing. Asset, that is cash, is decreasing. So when an asset is increasing, we debit it. When an asset is decreasing, we credit. Here the debit aspect would be bank and the credit aspect would be cash. Let's see it. So what would be the journal entry? Bank account debit to cash account. Bank account debit to cash account is a journal entry in this. Let us now quickly go to the third transaction. Third transaction that we have here is bought office furniture for rupees 20,000 and paid in cash. So what are the accounts involved here? Number 1, furniture. Furniture is an asset. Furniture is an asset. So it's a real account. You can call it an asset or a real account. Second account involved is cash, which is again asset or real. Come on, let's go aside and then write it in the answer. What are the accounts? Accounts involved. Accounts involved are furniture and cash. Furniture is an asset or real account. So is cash, asset or real account. Let me write. What is happening here? Furniture is being bought. The furniture that we have will increase. The cash is being paid. The cash that we have will decrease. Furniture is increasing. Cash is decreasing. Both representing assets. You should write what comes in as debit, what goes out as credit. Or an asset increasing has to be debited, an asset decreasing has to be credited. So, going by the rule, we need to debit our asset account and credit the, debit the furniture account and credit the cash account. Journal entry will be furniture account debit to cash account. The narration, if you have to write for this particular transaction, will be being furniture purchased and cash paid. So you need not really worry about the narration. It doesn't need brains to think of. You just need to use the word being and write the same transaction what is given to us in the question. Done. Let me now take you to the fourth transaction. Fourth transaction is purchased goods for rupees 3000 and you paid not by cash but by check. You purchased goods for rupees 3000 and you paid not by cash but by way of a check. Here, we don't really prepare an account for goods separately, so the account involved is called as purchase account. Yep, we underline goods, but we'll write as purchase account. These goods which are purchased will be represented through purchase account, which is real come nominal account. It cannot be called as a real account. It cannot be called as a nominal account in isolation. I call it real come nominal account. It is real because it represents goods. It is nominal because it is like expense. So how can one account behave both like? This is happening because we don't prepare a dedicated stock account. Get that? Then the other account involved is check. Check is paid, which will be shown up to the bank and it will decrease my bank balance. So check here represents my bank account. So goods is asset or expense, real come nominal account. Check is asset or personal account. That is representing bank account. So the accounts involved, let's write it, is purchase and bank. Purchase, real come nominal and expense account. Real come nominal, asset or expense account. Bank, it is a personal account or an asset. When you purchase, the purchase account would increase and the bank balance would decrease. Purchase account is an expense increasing or an asset increasing, or real account, debit what comes in, we have to debit. Personal account, credit the giver of benefit. Banker is giving us the benefit. Or what you say, it's an asset decreasing, we basically credit it. The journal entry for this transaction will be purchase account debit to bank account. What will it be? Purchase account debit to bank account. For this particular transaction, the narration would be the same what we have read in the name of the transaction. Being goods purchased for rupees 3000 paid by check. That, my friends, will be the narration. Going ahead, last transaction is E. Sold those goods. What do you purchase in the past? You sold those goods for 4000 rupees and received cash. Again, there are two accounts involved here. Number one is goods. We are not going to prepare goods account. We'll prepare something called as sales account here. And the other one is cash. Here there is no check. There is no check business. It's all cash business. The accounts involved are goods and cash. Goods are again asset or expense account. Sorry, asset or income account in this case. And real come nominal. Okay. In the case of cash, it is not asset or expense. It's asset. Okay, fine. Take me. I apologize. It's not expense. It's asset and it's real. I copied pasted the text from here there, so it became a little wrong. So now tell me, friends, sales account or cash account? Those are the accounts that is involved. Sales account is an asset or income or real come nominal account. Cash is an asset or real account. Sales is decreasing the stock or it is increasing the income. Income increasing credit, asset or goods decreasing credit. So either way, sales account has to be credited. Cash balance is increasing. Debit what comes in, or cash increasing debit. Cash account has to be debited. So asset decrease, income increase, or asset increase. So either ways, cash is to be debited, sales is to be credited. The journal entry that we should be passing is cash account debit to sales account. If you have to write narration to this, you would be basically writing it as, what would you write it as? You would write it as being goods sold for rupees 4000 and it's received in cash. That, my friends, will be the journal entry with narration for these 5 transactions. I hope it was of some help to you people in understanding how to pass journal entries. See you all in another similar video next time. Till then, tata, bye bye, take care and stay in the game.